What's the best thing about sell stops? The best thing about setting a sell stop is it takes the emotion out of the trade, out of the sell side. What's the strongest human emotion? I guess it's debatable, but without question, one of the strongest is fear. And when we set a sell stop, we can ignore any fear that we have day to day and let what will be, so to speak. Let's talk about this concept, and we'll talk a little bit more about sell stop strategy in general. And remember, this is not investment advice. I'm just giving you some thoughts on sell stops based on my 27 years of trading in the market. So here is Exhibit A. This is stock BGC. I bought this stock a couple of days ago right here as it came out of this really nice tight flag post earnings. But let's imagine for a moment. Here we got a prior uptrend. We've got a cup, got a really nice handle, and then broke out of that handle, found resistance at the top of the lip line, as is often the case, set up. This is kind of another high handle, almost a cap, if you will. And let's say for a moment that I bought the breakout of this cap, all right? And I set my stop about, I like to be average about 5% based on support lines. So let's say I set my stop right here. And I'm holding the stock, and I've been watching it go down for a couple weeks. And then earnings comes out, and over the course of the day, it is down a whopping 9%. What am I going to do? I'm going to panic and sell. But if I have my sell stop, then I can just be zen. I can say what will be, will be. And sure enough, if my stop was here, it did not come and hit my sell stop. It came down, tagged the 50-day, the whales or the mutual funds, the ETFs, swooped into the stock and drove it back off of that line. And it just became a shakeout, right? What I like to call a shoe clerk shakeout. Broke out the very next day. And now, assuming I had this position down here, which I don't, you're up 12%. So that's an illustration of why it's so helpful psychologically to set stops and then let the trade play out. So here's a few other thoughts about stops. So what I like to do when my stock gets up about 10%, I wait for it to go through its first natural reaction. So on this stock, let's say I bought it here, it drives up, comes back down, and then when it makes a new high, then I would move my stop up. I would start walking the stop up and get it to my initial purchase price. That's called backstopping. Like I said, I usually do an average of about 5% depending on support lines. But if I want a larger stop, then I'll do what's called a staggered stop. On this particular trade, here is my purchase point, 5.92 or something like that. And let's just measure here. I want to have my stop beneath the 50-day, but that is about 10%. And that is a pretty big loss for me. So what I did was I put half of my stop at about 6%, the other half at 10%. That gives me a lower average, right? Simple, but this is something that I didn't do for decades. I never even considered that you could have more than one stop at more than one price point. You could have 3 or 4 stops. If you have 100 shares, you could set a stop for 25 shares at a certain level, 25 shares at another level, etc., etc. Now this stock is at 6. Let's say we think it's going to top out at 10. So the nice thing to do would be to set a sell limit at say 9.97, but we can't do that if we have a sell stop set. You can't set a sell limit and a stop. So in instances like this, if you are disciplined, you don't lie to yourself. If you have the discipline, you can set an alert at your stop price, and so you put the sell limit into your broker, and then you put an alert at a certain price level, and your brokerage, you can probably set alerts with your brokerage. This is stockcharts.com, and I set alerts through stockcharts.com. I know you can do it through E-Trade. I'm sure you can do it through many of them. So you set an alert, and then when the alert goes off, you sell. Or if it triggers your sell limit, then the brokerage sells for you. Now, if you are able to be in front of the screen monitoring your stocks all day, you really could make a case for using alerts, because sometimes I have heard, and maybe you can chime in the comments, but I have heard from multiple sources, including Mark Minervini, that market makers sometimes will walk the price down and tag a bunch of stops if they see a cluster of stops and they have a big buyer waiting in the wings. So if you don't have your stop set with the brokerage, then you don't have to worry about getting stop hunted, so to speak. So that would be another reason to set alerts. But that's kind of more intermediate or advanced level. At the beginner level, set your hard stops. If the market is trending upward and you're in at a good buy point, your stop is probably not going to get tagged unless the stock is behaving abnormally, in which case you want to get out. And honestly, I would say the majority of traders, even experienced traders, are such, not victims, are such, I guess we could say slaves to fear and greed intraday, that for many traders it would be better to not even watch your stocks midday or during the day. And like I said, just let your sell stops protect you. A sell stop is like insurance. Do we have to pay for insurance? Yeah, every month. And does it suck? Yeah, it does. But when there's a catastrophe, we're darn glad we had it. Now I know for years, there's the old saying, sell stops just stop you from winning. And there was a time when I didn't use sell stops, and it didn't go well. It's much better to take paper cuts at 5%. Then as soon as you take a big hit, you're going to realize why sell stops are important. Let me show you an example. Yeah, here's KNSL. And let's say, let's say you bought the bounce off the 50-day right here, and you set your stop at the low right here. You would have gotten stopped out here at 405 for a small loss. And look what happened afterward. And if you didn't have a stop set, or if you had an alert and didn't honor your alert, you are in a world of pain, my friend. So I think in trading is such an emotional game. Anything we can do to remove emotion out of it will help us be successful. That includes using sell stops. That's my diatribe on that. Maybe let's just explore the stock just a little bit more if you want to hang around for a minute. BGC Group. Let's pull it up on MarketSmith here. This is in the finance industry, global brokerage company servicing the whole financial and real estate markets. Has a little dividend. It's a profitable company. We see some decent earnings acceleration over the prior 3 quarters. Nice sales acceleration over the prior 3 quarters. Gross margins came down. That's the opposite of what we want to see. The monthly is certainly very flat. Again, what we don't want to see. However, if we switch to the weekly, we really see a nice cup forming here. And sometimes stocks will break out of a cup without a handle, or maybe it puts in a handle here, and then maybe it makes a big run here. And if you haven't yet liked the video, if you could do me a favor and like the video, that will help get the video in front of other people. And let's look at it on Seeking Alpha too. Why not? I was just looking at Apple. Seeking Alpha Premium is my partner. It's a premium platform primarily for fundamental analysis. So you can have portfolios and you can organize them alphabetically, organize them by percentage gain. These are a couple wild ones here. But what we want to do right now is look at BGC. Let's say, so a lot of times I will buy a stock almost entirely based on the technicals. I look at this nice technical chart. I just glance at these three basic fundamentals: earnings, sales, gross margin. I make sure there aren't any big news events coming like earnings. And then I buy now and ask questions later. So now that I'm in the stock, assuming it performs for the next handful of days, then I'll start doing some research and start deciding, am I going to try to do a little 10 or 15% swing trade on this, or am I going to try to hold it for a bigger move? So I get on Seeking Alpha Premium here, and I have access to all of the financial information up here. For example, growth and valuation. But I'm getting a little sidetracked. That's not what I wanted to show you. I can read the transcript from the earnings call. That's helpful. I can read all of the news, press releases, and so forth over the past year. And then over here in analysis, we have a bunch of different analysts who provide their take on the stock. And we can just look at the recommendations: buy, hold, sell, buy. So I'm with the masses, for better or for worse. And then you can click on some of these. You can read the summaries if you are so inclined. You can read the articles. You can read the comments. And you can also look these analysts up and see how many followers they have, see how their performance is, and then you can weight the analyst's opinion based upon their track record. So before I make my gripping conclusion, I do want to let you know that I have a Patreon service. There's a link in the description below. Every weekend I show my current holdings, including this one, BGC, and my focus list, stocks that I think are looking very promising. And I do occasional blog posts during the week as well. You might want to check that out. So now, gripping conclusion. The longer I'm in this business, the more I am convinced that sell stops are absolutely essential to being a successful investor. William O'Neill said 8%. Minervini likes to average about 5%. Somewhere in that range, I'll let you determine your style, but you got to use them. Not having a sell stop is like driving around without a seatbelt, or going skiing without health insurance. It's way too dangerous. Let me know your questions or comments on sell stops or anything else, and I will see you in the next video.